Hello dear students. In today's video, we will going to see some basic theory questions from topic 1, that is financial accounting. These questions are little bit important from exam point of view. So let's start. So this is the first term, that is bookkeeping. So question can be asked for multiple choice question, true or false, or it may be for a short note. Like what is bookkeeping and what are the objectives of bookkeeping. So let's see the answer. So bookkeeping is an art or science of systematic recording, classifying and summarizing the financial transactions of business for a particular period, generally 1 year. So this is the basic definition, basic meaning of bookkeeping. If possible, write the definition also. You can write any one definition. So you can give the simple one also, like that J.R. Bartley boy. Bookkeeping is an art of recording business dealings in a set of books in simple way. Okay. Then what are the objectives of bookkeeping? Understand, the main objective of bookkeeping is to keep a complete and accurate record of all the financial transactions in a systematic, orderly, and logical manner. So, important point here in this point is keep a complete and accurate record of all financial transactions. Then, all the business transactions are to be recorded date-wise and account-wise. Bookkeeping serves as a permanent record of monetary transactions of an enterprise business, and it can be produced as an evidence whenever and wherever required. So this is also prepared to know the profit or loss of the business during the financial year. Then you can know the total assets and liabilities of the enterprise. Then to know what the businessman owes to others and what others owe to him. And the last one is businessman comes to know the current year's progress over previous year and compares its financial results with other business enterprise in similar line. So this will be the question or that can be asked in your exam for short note. The next question that can be asked will be advantages of financial accounting for short note. So here in this question, you have to write almost all the advantages. So we will just discuss the points, and likewise you have to give some explanation for that point. See, the first advantage is facilitates replacing memory. Then second is acts as a legal evidence in case of disputes. Then it assists in the management procedure, that is for planning and controlling business activities. Then it facilitates control over assets, facilitates complying with legal requirement, facilitates ascertaining the net results of operations. Then next is facilitates ascertaining financial position. See, position statement you can prepare from this accounting. So what is position statement? That may include balance sheet, cash flow statement, fund flow statement, working capital statement, etc. Then it facilitates taking decisions. See, decisions for whom? For short-term creditors, long-term creditors, present investors, potential investors, employee groups, management, general public, tax authorities, etc. Okay. Then next advantage is facilitates the settlement of tax liability. It facilitates the ascertainment of value of business, facilitates the raising of loans, facilitates a comparative study, and it facilitates detection of misappropriation, frauds, and errors. So here are advantages of financial accounting. So you have to write almost all the points, or your answer must cover all this point. Okay. Yes. Then the next question that might be asked for MCQ or answer in one word, that will be a transaction. Okay. So transaction means exchange of goods and services for money or money's worth. So you have to remember, if any transaction which is not having any value or money's worth, that cannot be recorded in the accounting or books of accounts. Okay. So transactions are of two types. First is monetary transactions and second one is non-monetary transaction. Monetary transaction is again divided into two parts, that is cash transactions and credit transactions. Okay, so cash transaction means a business transaction is which cash is paid or received immediately, and credit transaction is one in which cash is not paid or received immediately at the time of transaction, but it is paid or received at a later date. Okay. So these non-monetary transaction means the transaction which does not involve an exchange of money or money's worth directly or indirectly are called non-monetary transactions. An exchange of one thing against another thing is called as barter transaction. So remember this point, non-monetary transactions are not recorded in the books of accounts. Okay. So this might be asked for your true or false. Remember this point. Here are some other concepts also, like entry. Entry means recording of a business transaction in the proper form or method in the books of accounts. Okay. Then narration. Narration means a brief explanation of the business transaction for which an entry is passed, and it is always given in bracket below the journal entry, and it usually starts with the word being or for. So many times question can be asked on this narration. Then the next term is goods. It refers to merchandise, commodities, articles, or things in which a trader trades. These are purchased or manufactured for the purpose of sale and to earn profit. See, just remember this point and just go through it once, that capital, that is amount invested into the business by the owner. It is also the equation is there, that is capital is equal to assets minus liability. Okay, so whatever assets you have and whatever liabilities you have, the difference between these two is known as capital. So remember this equation also. Then this is a liability of the business, as this amount is payable by the business enterprise to the owner at the time of closure of business. Next is drawings. So drawings, the amount of cash or value of goods, assets, etc. drawn from the business by the owner for personal use, called as drawings. Okay. These are the some most important concepts: debtors, creditors, and bad debts. Okay. So in a simple way, just remember, debtor is a person who has to pay to the business for getting goods and services on credit. Okay. And a debtor is a person who owes money to the business. And creditor means he is a person to whom business owes the money. Then the next is uh, expenditure. Okay, so expenditure means an amount spent by the business for any consideration received by business. Okay, so expenditure is divided into three parts. First is capital expenditure. So that expenditure incurred for acquiring fixed assets. Okay, then revenue expenditure. These are the routine expenditures. Okay, for or short-term benefit is there from this revenue expenditure. Okay, and the third one is deferred revenue expenditure, which is basically revenue in nature but benefit of which is not exhausted within 1 year, is called deferred revenue expenditure. Okay, yes, so these are the types of expenditures. So remember this point and do it properly. All the best.